Welcome to the London Property Podcast, episode 15. Obviously, it's a different kind of episode, and as you can see, we're doing this over a Zoom conference call because due to the COVID-19 situation, Chris and I are actually no longer able to do this podcast and vlog in person. So we are utilizing the technology that we have at hand, and luckily we're still able to kind of do this. Hi, Chris. Say hello to everyone.
Hi, Marius. Hi, everyone. How you
Yeah,
doing?
yeah.
How you holding up?
Yeah, all good, all good. One thing I think, it's going to be obviously a little bit different. I hope the audio and the video quality should be fine. I mean, you've got a good internet connection, and I think mine's okay. So, we are obviously living through unprecedented times. We haven't been in the office. Has it been 2 weeks now, Chris, because of the coronavirus? I think it's 2 weeks now, isn't it?
Yeah.
Yeah.
Okay, yeah, it's 2 weeks.
Yeah, so obviously the whole world has come to a standstill, and naturally the property market has been affected because, in our industry, we're no longer able to go out and do viewings, etc. We have just been working on the pipeline that we had built up prior to the lockdown. So that's kind of what has kept us busy. But obviously, new business going forward is going to be very tough. And, as long as the lockdown remains in place, I guess everybody's in the same boat in the industry, because viewings are going to be very tricky. So, it's an unprecedented time. Obviously, news of the week, I'm going to start off. It's an article from a week and a half ago when the banks essentially kind of, said to the government, the whole housing market needs to be put on hold. And essentially all the banks kind of called upon the government to freeze the housing market, mainly because they were concerned about lending and, doing new mortgage applications, given the fact that, one, a surveyor won't be able to actually go to a property and value it because of the lockdown measures. And second of all, obviously banks are quite concerned in terms of the economic implications that the whole pandemic will bring to the world. So there have been calls for that. I think some banks have put a hold on any new mortgage applications going forward. And obviously, if you had applied for a mortgage before this, then that's essentially still going ahead. But any new mortgage applications have been put on hold by the banks. And obviously the property market has been impacted. What's important to note, we've had research obviously coming out from Savills and Knight Frank. A lot of the talk has been that there might be a small decrease in house prices, given the lack of transactions and the lack of activity that we're going to see over the next couple of weeks. But it's very interesting that both these research documents that came out from Savills and Knight Frank essentially talk about how prime central London isn't really going to be affected in terms of the prices. Yes, across the board, you're going to see a massive reduction in the number of transactions because people can't move and, surveyors cannot go out and see properties. But prime central London has already kind of been going down for the last 4 years. So it's already great value, especially if you're an overseas buyer and you factor in the currency. So that's interesting. Obviously, there are a lot of unknowns. We don't know when we will actually be back into the office, when things will slowly get to normal. But I think that, a lot of people, I've been speaking with some buyers who think, oh, the house prices are magically going to collapse because of the coronavirus. It's not really like that, because the fundamentals are, still there, essentially. And the likes of prime central London, which is a market that reacts very differently to the rest of the country, in many ways, you're not going to see massive drops anyway. Plus, those people that are selling those kind of properties in prime central London, they're more comfortable with waiting. So yeah, massive impact in transaction levels because of Corona. I don't think we'll see massive drops in prices, certainly in prime central London. What do you think of the situation, Chris? Do you think this is an accurate kind of take on, it's obviously very hard because it's so unpredictable and we don't really know what's going to happen. I mean, as we speak, we've got Boris Johnson, UK Prime Minister, in hospital in intensive care, which is, we would have never imagined this a week ago. So yeah, we're very, everything can change from day to day. But in terms of how you see the property market and obviously the central London property market, how do you see things, evolving over the next couple of weeks and months?
I think it's really dependent on how long the situation goes on for, right? Because, I mean, if it was just going to be 3 months and there's kind of certainty on how all of this is going to pan out, I think it would be a lot more predictable. But we tried to record this episode and we had a technical problem last week, basically. And what we were saying in that episode is now changing to this recording that we're doing.
Absolutely.
And what's changed is previously we said it looks like the situation is probably going to be a V-shaped recovery, kind of sharp down, not in terms of prices, just transaction levels. And then, once we come out of it, it's going to be kind of shooting back up again. And now it's kind of turning more towards a U-shaped recovery. But this part of the U, we don't quite know how long it's going to take to recover. So everyone's trying to look at what's happening in Italy and Spain to see how they come out of the crisis. Nobody really kind of trusts China's figures, and it'll be interesting to see what happens. I think if it is the 3 months, then obviously it's not great, but I don't think the prices will be dramatically affected by a huge amount, particularly in the central London region, because if we just think about all the clients that we have, we've barely had one client call us concerned about the situation. I mean, we haven't actually had any. So that just kind of goes to show that people who don't really have high mortgage debt in these kind of times, that have quite a lot of spare cash reserves, particularly around Kensington, Chelsea and prime central London, they can afford to sit this out for 3 months. The majority of people out can. Obviously, some people can't because they short for cash for whatever reasons. But I think it will affect the market worse in areas which are more peripheral areas, such as zones 2, 3, 4. People who need the money from kind of paycheck to paycheck basis, and if they don't get it, they're in some kind of problem. I know the banks aren't going to be able to kind of foreclose on anybody in these current times, but coming out of this, people could be in a position where if they have been made redundant looking for work, they might want to offload something that they've got some equity in to kind of get themselves back on track as an emergency measure. So I think that's why, if you are investing in property, generally speaking, prime central London is the most kind of safest place to be when there is a crisis that comes along. And this is 100%, this is a crisis. And that's so that's my take on the situation. We're just going to have to monitor it week by week, and hopefully if it goes on for 6 months, then I think we've got a real issue. And if it goes on for kind of 3 months, then we can kind of see a way out of it, although it's not pleasant. So I was talking about, I was going to speak to you guys about an article which seems to be a bit outdated now, but because we haven't put a podcast out for a while, we're going to say it anyway. And it's on the budget, and the only thing in the budget that was property related was the 2% surcharge for overseas buyers. And what that is, that's due to come into effect from April 2021. And the thoughts behind that are, there's a lot of homeless people out on the streets in London, and they need accommodation. And this extra fund generated from these overseas investors are going to go as a slush fund for paying, for helping homeless people. So what impact is that going to have to the property market going forwards? Well, the only precedent that we can really look at is the surcharge of 3% stamp duty for buy-to-lets and second homes that George Osborne put in I think it was 2015. And what I can remember from that time is there was a huge, gigantic increase in transactions and activity levels, literally two to 3 months before this tax came in order to beat the deadline. And some people made it. I can remember lawyers were telling us at the time, solicitors were saying to us that they were staying in the office and they were made to stay super late into the evening to get the exchanges all done, because otherwise some of their clients, if it went into the next day, they were going to be paying 30, 40, 50,000 pound more in tax. So it was a real rush, and the government have suggested that this will actually have a short-term positive impact into the tax revenue take for next year, the closer we get to the deadline. They do think a lot of people who've been sitting on the fence, foreigners looking to buy, they'll probably more than likely pull the trigger, particularly on the higher level transactions where it's going to make more of a significant impact. So they think the tax revenues are going to go up and then they're going to come down the year after. If we put it into context with, well, how does that compare with other cities around the world? We look at, say, Hong Kong, for example, that for an overseas investor to buy in Hong Kong, they've got to pay, I think it's 33%. Whatever it is, it's a hell of a lot more than 2%. And in Singapore, the figures I were looking at, it was something like 20%, 15, 20. I mean, don't quote me on that, but you get the general idea. 2%, in comparison to other protectionist countries and territories around the world, 2%, people can really kind of afford to pay that. The only place that doesn't have an additional surcharge, a notable kind of city that competes with London, is New York, but they do have a lot higher selling costs, from what I understand. So the entry levels in New York are lower than what they are in London, but from what I understand, the holding costs are significantly higher and the selling costs are significantly higher as well. So London will fare not the cheapest anymore for, taxes going in to buy. They're somewhere sat kind of mid-range, but they're it's extremely cost effective to hold the property in relation with other countries, because we don't have any mansion taxes or anything like that, any large annual taxes like they do in other cities. Paris, for example, I think in a year, isn't it, a wealth tax? So London is still relatively quite attractive compared to a lot of other places, and I don't think that's going to change. Just having a look here to see if there's any other interesting points in this article. The Chancellor said the money raised from this tax revenue will be used to fund 6,000 new homes for homeless people. I guess nobody can kind of disagree with that.
I mean, it was part of the election manifesto, and the figure they were looking at, it was 3%, wasn't it, before the election? So they've obviously brought it down 1% from what was speculated before. But I mean, like I said, in comparison to a lot of other major players in the real estate market, I think London still fares really, really well, and it's very attractive and will continue to be attractive for these people because London is London in many ways. So what we will see, obviously, assuming that this situation goes away over the next 3 months or so, we're going to see quite a lot of pent-up demand, not just from the local market and the local buyers, but you're gonna have all these overseas buyers who are going to try to, like you said, get things done and closed before April 2021. So that's going to be, I guess, Q4 of 2020 and Q1 and Q2 will be, there will be quite a lot of transactions and quite a lot of positive activity in the market, certainly for prime centre London, because even now prime central London, after 4 years of price drops, the price is going down. it presents really good value for overseas buyers. If you have your money in dollars, we were looking at the currency play and factoring how much prime central London has gone down over the 4 years, plus the weaker pound. We were looking at, like, for US dollars, you're looking at like 43% discount, which is incredible, right? Considering you're buying in one of the hottest property markets in the world. So yeah, I think it's going to hit people, but not that much, and I don't think it's going to put people off. And if it helps the homeless, then I guess it's a really good thing as well. If they can use that money, that extra revenue to tackle something that we see in London, and it's quite important to try and sort out. Excellent. Okay, so those are kind of the two news of the week that we were gonna discuss a week ago. Basically, what happened: we recorded everything, but the audio didn't record for some reason, so we ended up with just the video, no audio. So basically, we're filming this again. But like Chris said, everything's changed. Things have changed quite a lot. So apart from the budget and the overseas stamp duty tax surcharge, question of the week. Remember, we had that question of the week, Chris, which was quite, it's obviously really important. And obviously the government has, again, since we had this question of the week, the government has stepped forward and they've provided a lot more guidance as to what is, what can be done. It was basically somebody asking, I've exchanged contracts on a property, completion is due for 2 weeks' time. Given the current, coronavirus situation, what should I do if I'm not able to complete due to the moving company cancelling or booking? Obviously, I think it's important to put a disclaimer there. The first recommendation, covenant there, is to speak with your solicitor, because each transaction, each deal, the solicitors will be able to advise you best on what can be done if completion cannot actually take place, because it is really unprecedented time that we're living through. So it's we're not really in a position to give advice on, as a general kind of advice. Speak to your solicitors. I'm sure there will be some solutions there which they can recommend, and they work with, basically the two parties have to come together to an agreement and kind of come up with a solution.
I've had it. I had it at the end of last week. A property that we've already exchanged contracts on, and it was a 4-property chain, and the buyer right at the bottom of the chain, his removal company cancelled the job. And I think he was struggling to find another removal company. So he went up the chain, and everyone, the other kind of 2 people up the chain, said, "Okay, no problem. We'll have to move the completion date back. It suits us as well." And then the client right at the top of the chain didn't want to do that. It didn't suit them. They've already got a vacant property, and basically they vetoed it and said, "No, it doesn't suit us." So from what I understand, the whole chain kind of has to complete. The buyer at the bottom of the chain, there are still removal companies moving, and I guess my understanding is that still has to go ahead on the original date. So like you say, everyone has to be in agreement, unless there is a change in the law. It's a bit of a grey area, really, isn't it? I would say.
I think there was some advice from like the solicitors authority, regulatory authority, and they kind of did provide some advice for solicitors what to do in these circumstances, because like I said, it is a grey area. It hasn't happened before. We haven't had this kind of crisis, but in many cases, I guess it does come down to the 2 parties coming to a solution and an agreement. And I'm sure there will be maybe less moving companies still kind of doing things. The government advice is that if it must happen, then it's fine to go ahead, as long as you obviously stick to the safety measures that they have been advising people to follow. But the best thing to do is just speak with your solicitor. And I guess if it is in a chain, it comes down to, like this case you mentioned that we've got, it comes down to all parties in the chain coming to, an agreement to either delay completion, etc. So yeah, definitely speak to your solicitor. It can happen, but there are a lot of moving parts to this, and they all have to kind of be aligned for completion to still happen. But if not, if it's not possible, then I guess you'll have to work towards trying to complete. So yeah, difficult. Everybody's impacted by this situation. So I guess it is what it is, and yeah, speak to your solicitor. I guess that's the easy answer. But yeah, that essentially concludes episode 15. I assume going forward for the next couple of weeks, at least, we're going to have the same kind of format. Now we've probably ironed out some of the technical difficulties that we had the first time doing this. But it is what it is. We have to make do with what we've got, and at least we've got this technology and all these things that we're still able to connect with people and have these kind of conference calls, and that's really good. So we will see you guys next week. I'm sure there'll be more developments happening within the next 7 days. Hopefully Boris Johnson gets out of hospital, and we'll see what other property news we've got to talk about. And just stay safe, I guess. Wash your hands, follow the advice, and stay at home. That's really it. And hopefully we'll be able to go back to normality sooner rather than later, because it is impacting everyone. It's not just a matter of property now. I think all industries and everybody's really affected by this. So the sooner things get to normal, the better it is for everyone, not just the property market. And obviously, Chris, we're still available on our phones, email address. You can still reach out to us on social media. Obviously, viewings and things like that are more difficult, but very much so we're just a phone call away, an email address, an email away. So we'll be still able to help people and kind of guide people through this uncertain time when it comes to property. So yeah, any final words for our episode 15, Chris? What would you like to add?
No, I think we've wrapped everything up. I think let's get on to next week and see if there's anything more positive to talk about. I fear not next week, but
well, next week it might be.
See if there's something more interesting to talk about.
Yeah, exactly. Well, we keep obviously an eye for any developments every day, so I guess there will be something relevant to mention about property. But it is what it is, and we'll see everyone next week, episode 16.
Yeah,
and stay safe, everyone. Bye.
See you guys. Bye.